What if your mutual fund chased only those stocks that are already moving up? That's the idea behind momentum investing. And the ICICI Prudential Active Momentum Fund is built around it. But can chasing momentum really create long term wealth? Let us break it down in this video. Hi there, welcome back to holisticinvestment.in, where we help individual investors like you to make the right financial and investment decision to reach your financial goals in a more faster and smarter way. Now, before analyzing this fund, let us first understand a few basic details about it. So, as this is an NFO, it opens on 8th July 2025 and closes on 22nd July 2025. Some of the key features of this NFO are: this is an open-ended fund type which belongs to the category of equity thematic, and also it follows the benchmark index of Nifty 500 TRI, and it has an exit load of 1% for redeeming your investments within 12 months. There is no entry load, and the minimum investment amount required to invest in this fund is 5,000 rupees. So the fund manager for this NFO is Ms. Manasvi Shah, and also according to the riskometer, the risk involved in this fund is very high. So the primary investment objective of this fund is to generate long-term capital appreciation by investing in equity and equity-related instruments of companies reflecting momentum factors. So now, as we have a basic idea about this NFO, let us now move on to the analysis part of the video, where we are going to analyze the pros and cons of investing in this NFO. So first of all, let's start with the advantages. Number one, momentum based strategy. The fund follows a clear theme. Invest in stocks showing strong recent performance with the aim to ride the trend. Number two, actively managed advantage. Unlike static momentum indexes, the fund manager can dynamically tweak the portfolio to manage risk and capture opportunities. Number three, potential to outperform in bull markets. Momentum strategies often shine when markets are trending upward by holding top performing stocks longer. Number four, diversified exposure across sector and market caps. Since momentum can appear in any sector or size, the fund can capture winners across the board. And number five, ideal for tactical or satellite allocation. So if you already have a core portfolio, this fund can add alpha by participating in trending segments. So these are some of the advantages of investing in this NFO. Now, let us take a look at the cons, the disadvantages. Number one, high risk, high return strategy. Momentum can reverse quickly. What's going up fast can come down faster. This strategy may see sharp drawdowns. Number two, short-term performance swings. Not suitable for conservative or short-term investors. Performance may be volatile and inconsistent over months. Number three, heavily dependent on market trends. Sideways or choppy markets can hurt returns as no clear momentum exists. Number four, active fund is equal to higher expense ratio. You are paying more than a passive fund, which means the fund needs to deliver better to justify its cost. Number five, new fund, no long-term track record yet. As a relatively new offering, it doesn't yet have enough history to judge sustained performance. So what is the final takeaway then? ICICI Prudential Active Momentum Fund is a bold strategy. Great when markets are in your favor, but challenging during uncertain times. It's best suited for experienced or adventurous investors who understand momentum investing and already have a solid core portfolio. As always, make sure it fits your goals and risk appetite, and consult a certified financial planner before investing. So, our personal recommendation is that if you are a new first time investor or even a conservative investor who's not willing to take a lot of risk, you can definitely avoid investing in this fund. But if you still want to invest in a thematic fund like this, there are other similar existing thematic funds with track record of minimum 7 to 10 years, where you will be able to analyze how it has performed across all market cycles, and you'll be able to take a calculated risk. But as this is an NFO and we do not have proper portfolio and research, investing in it is like taking a blind risk, which is very risky. That's why if you're looking to add funds to your core portfolio, definitely avoid investing in an NFO like this, because as I have previously mentioned, investing in it is like taking a blind risk. If it underperforms, it can significantly impact the returns in your overall portfolio. And also, if you don't know when to enter and exit from a thematic fund, avoid investing in a thematic fund, especially in an NFO like this. Even for a seasoned investor, it's very hard to predict, so it's better to be safe than sorry. And also, if you do want to take a professional guidance to invest better, you can definitely consult with a certified financial planner, because they will help guide you by looking into the suitability of investment objective, risk profile, overlap ratio, and allocation of this fund, and see whether it aligns with your risk tolerance, your investment goals, and time horizon, and help you invest in better funds that actually serve your values and serve your goals in the long term period.
And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to our YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.